Hey, happy Tuesday everyone, it's Lisa Last here, and today I wanted to chat with you guys about property taxes. I get a lot of calls this time of year from clients saying, I thought the bank was paying my taxes, but I got a notice from the county or the city saying that my taxes are due in full. So today I'm going to try my best to explain property taxes to you, which 10 years in the market, I still get a little bit confused by them. So I hope I don't confuse you guys more and find some clarity. So, okay, you can pay property taxes one of three ways. You can pay them in with your mortgage payment every month, interest-free. And then at the end of the year when taxes are due, which is June 30th or July 1st, the mortgage company will pay your taxes in full for you. The second way to pay is directly to the municipality. Usually you register on something called the TIPS program. You do it right on the county or municipality's website, and then they take the payment out on the 1st of every month, and then you never owe anything at the end of the year because you've been paying monthly. And the third and final way is to pay in full at the end of the year. There is no advantage of paying your property taxes in full on June 30th. So unless you have an amazing high interest savings account, most people prefer to pay monthly. So okay, that's pretty straightforward, right? But the second half of it is when you purchase real estate, there's something called a property tax holdback. So to make life really confusing, property taxes are due in full in June for the current calendar year. But the current calendar year runs from January 1 until December 31st. So you would think that they would collect those taxes on January 1, right? Or however, for the previous year, but they don't. Instead, they break it up and they collect it in the middle of the year. I'm not sure exactly why they do this, but that's how it works. So if you purchase a property, for example, from somebody and your possession date is May 30th, if that person has not paid their taxes monthly and they pay their taxes in full normally in June, that tax account follows the property, not the person, which means when you close at the law firm, that seller is going to have to give you a whole bunch of money for the property taxes that are due. But the property taxes that are due are not going to be, let's say the balance is $3,000. They're not going to give you $3,000 because they're not going to live in the home for the remainder of the year, but they are going to give you, let's say, approximately half of that. Now, if you take that cash at the law firm and you go, oh, sweet, we've got extra money, and you put it towards your legal fees and stuff, you're going to get hit with a bill and go, oh my gosh. So it's incredibly important that when you're purchasing or selling a home, that you're very careful about property tax adjustments at the law firm. The seller will either give you a credit, or you will owe the seller money, or it'll be a zero balance. So it's very, very important that you communicate very well with the lawyer and with myself, with the municipality and the mortgage company to ensure that those taxes are paid. I did have a client recently who thought the taxes were being collected and ended up $5,000 behind on her property taxes. For a young single gal, that was very uncomfortable for her to have to catch up on that. So I don't know if I've clarified anything, but I hope I have. But what's important is when you get that property tax notice, if you think that the mortgage company is paying for your taxes, let's just have a chat and double check in full that in August they have been paid. So there you go. If you have any questions, give me a call, 780-951-1434. Thanks, guys.